Well, good day, traders. Chris Weston here, Head of Research at Pepperstone. So once again, we're going to have a quick look at the week that was and a look ahead at the week ahead of us, just to get a sense of what's potentially going to be an event risk for our portfolios and ultimately what the market's expecting for the potential moves as well. But let's have a quick look at what's happened in G10 FX this week. And as you see here from the Bloomberg chart, the Swiss franc's been the best performer against the dollar. In fact, the dollar's had quite a mixed reaction this week, considering all the news we've been seeing, all the sort of tweets Trump's been putting out to try and devalue or lower the dollar in some capacity. But certainly it's the lower yielding currencies, the funding currencies, which has performed very well. In fact, the euro's adopted this idea of being the ultimate funding currency and a counter-cyclical currency. So when we see implied volatility picking up in financial markets, we tend to see the euro working quite nicely as that carry trade gets unwound. People are looking to sell out of those high yielders and look to buy back the funding currencies, which of course is the yen, the Swiss franc, and now the euro, which has firmly come into that situation. We are watching as we go through the new week what's happening in the German Bund complex, because if you look at 10-year Bunds trading negative 56 basis points, there is lots of talk out there of potential about a fiscal policy, a fiscal response, mainly to talk and go into the sort of climate change situation. But the reports are that they're potentially expected to break the balanced budget. There's going to be a lot of headwinds to that on a political front, but that could be quite interesting just to see how the Bunds react and if there's any kind of reaction in the euro. And this coming at a time when we're seeing increased political issues that are playing through in Italy. And what we've seen from the Deputy Prime Minister is that potentially they're going to clarify their response on Monday. So we're watching German Bunds, but we're also watching Italian BTPs just to see, if Italian politics becomes more of a headwind and see if there's more of a headwind coming through into the euro. As I say, the euro has been working quite well because it's been a counter-cyclical currency, high volatility. People buy the euro because people unwind those carry positions. You can also see on the downside that the Kiwi dollar has been the worst performer. I don't think that's going to surprise anyone too much. The RBNZ going along with the Reserve Bank of India and also the Thai Central Bank going above and beyond. And what's the message that they're sending out to the world? How worried should we be if they're trying to get in front of the curve? And that's why we're seeing the Kiwi dollar the worst performer there as well. The pound's fairly flat, and that's quite an interesting one. There has been a lot of talk in the press about a potential election being called days after Britain are due to leave the EU on the 31st of October. That suggests to me there is a heightened probability that we can see a no confidence vote being pulled on the Johnson government, probably when the UK Parliament come back after recess, which comes on the 3rd of September. If you have a look at the implied volatility in cable for the 1st of November, the day after that, if you have a look at my implied volatility chart, you can see on the special events, the Brexit deadline, that the implied vol at the moment, at the money implied vol is 11.86%. There's obviously a lot of time factor being priced in. There's about 84 days or so till Brexit. But you can see the expected move is around 575 points if we look at the strangle pricing and people who are looking to buy and sell volatility. So that's a 68.2% level of confidence that we're probably going to get about 575 point move in by that Brexit deadline. So we continue to watch what happens. Also in the UK, bear in mind we do see a lot on the labour market as we go through this week. That will be certainly the jobless claims. We're going to get the unemployment rate, and then we get the inflation numbers with the CPI and the retail price index as well throughout the week, and then we get retail sales into the back end of the week. So certainly the pound's going to be one to watch. You've got the politics driving it in one way, and you've got economic data driving it another way as well. So something that we are going to be watching throughout this week. Let's focus on what we've got as well. I mean, the Australian dollar is going to be one that we're watching very closely. Has been influenced by dollar CNH, and that continues to be the most watched pair. We talked about it last week, that dollar CNH and CNY, and certainly the fixing mechanism are well worth watching, and they have been a key driver throughout this week. But in terms of Aussie dollar, the NAB business confidence and Westpac consumer confidence will be small drivers. I don't expect that to be a massive impact on the Aussie dollar. You've got the wage price index as we go through the week, and interestingly the market's expecting that to go from 2.3 to 2.4%, which isn't obviously a massive jump up there, but that would be the biggest wage increase, or the biggest the highest level of wage increases since December 2014, if that comes on the money. And then on Thursday we've got the employment numbers, where the market's looking for 18,000 net jobs created, and the unemployment rate to stay at 5.2%. We've got Christopher Kent and Guy Debelle speaking, so that's going to be an interesting one. But if we go back to the table, have a look at the implied Aussie dollar volatility. You can see that sitting around 8.71%. Expiring by Friday next week, New York cut. To put context on that, that's the 51 percentile. So despite all this data that we're going to see, the market's not expecting massive fireworks. In fact, the expected move up or down with a 68.2% level of confidence is around 70 points. Some people like to use the average true range, Bollinger Bands, but I like to use implied volatility, the market telling me what they expect to happen. And the market's expecting about a 70-point move, which you can see goes into a range of 68, 66 and down to 67.26. Increase the level of confidence out to 90%. We're using a 10 delta and using a strangle price there. And you can see that the market's saying, well, on an extreme move throughout this week, we'd probably get a 118-point move. So that gives you some expectations of the expected move in Aussie dollar with that kind of level of speakers and data. Going to the US, I think obviously we focus on this very closely. And I think if you're looking at a macro situation in the US, have a look at the 10-year real yield. That's the inflation-adjusted real yield. That's at 4 basis points. There's a very good chance throughout this week that could go negative. So we're watching dollar yen. Will there be a negative reaction there? We've seen dollar yen earlier this week, breaking out of that multi-month trading range. And that's looking pretty heavy at the moment. Are we establishing a new trading range in dollar yen? And I think real yield's going to drive that situation. We've also got to keep our eyes on 210's yield curve. That's at 9 basis points. Again, people are saying we've seen inversion in most parts of the curve. But are we going to see 210s going to inversion at the moment? So we're trading through key resistance levels to the downside. Are we going to get down to 0 on 210s? And again, that could weigh on the dollar. But we've got inflation numbers coming out Tuesday. The market's looking for headline to go from 1.6 to 1.7, core to stay at 2.1%. That could be an event risk for the week. Later on in the week on Thursday, I thought we've got retail sales numbers where the advance read's expected at 0.2. And then the control group, which is the element which feeds directly into the GDP print, that's at 0.4%, or certainly that's the consensus. So I think they're the sort of highlights of the week. We don't have any Fed speakers that are scheduled, but we may get someone who's sort of left of centre that comes out in the press. China, there's the high frequency data dump that comes out midweek. We've got fixed asset investment, industrial production numbers, and then retail sales. Yeah, we've got new yuan loans coming out. They're not scheduled at any set time. They could come out at any stage, but I think that will be a really interesting one as well. There has been some talk on the traps that China could be displaying more of a stimulus to try and counteract some of the offset and the fallout from the trade sanctions that have come through. So certainly something to watch there as well. But that's going to get a lot of attention. I don't think it's going to be a massive market mover. Also keep an eye on what's happening in Europe throughout this week. As I say, there's a lot of political issues playing through. We get the ZEW confidence numbers and the CPI numbers. Have a look at euro dollar in terms of implied 5.81%. So despite everything we're seeing on the political side, the market's saying that the implied volatility is not particularly high. They're not expecting big moves either side from spot. That's a 38 percentile if we look at the rank on that. So that gives us a move in euro dollar of around 76 points expected, up or down from the current price. If you take that implied out, you're looking for about 133 points. So that's quite an interesting one there as well. So we've had a big whirlwind move. Obviously, people have been focused on gold, dollar CNH, what's happening in oil, which has had some big volatility. But they're the event risks that we're watching throughout this week, and certainly implied volatility is not giving us any kind of idea that we're going to see big fireworks playing through in G10 FX. That may well change though, of course.